If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. All right, super excited. Vic is not with me this week on Health Further, but I have a guest who I've been spending a lot of time with lately, happily. He is one of the newest members of the board of the Healthcare Finance Management Association, but is no stranger to that organization or really to, innovation, healthcare finance. For anyone who knows anything about this world, Ash Shehata joining us as a guest host, hopefully for the first time. But Ash, thanks for being here.
Marcus, it's a pleasure. And I always enjoy spending time together. We learn so much, and I feel like there's so much happening in the world. So I can't wait to get into it today with you.
Yeah, no, listen, it's a real thrill. Just for our listeners, would you mind just giving a quick rundown, which is very difficult given, the great career that you've had and you continue to be building, but just a little bit of background on you and why it's going to be such a delight to have you on the show today.
Well, thanks, Marcus. So I'm Ash Shehata. I'm currently working for an organization called Impact Advisors. It's a private equity-backed healthcare portfolio company. But I just retired from KPMG last year after a 13-year career. So really excited to spend time with a lot of CFOs and executives and CEOs. But my background is actually, believe it or not, in tech and operations. I'm a former tech exec with IBM Global Services and Cisco Systems. I ran 2 VC companies over my career and actually started my career in the industry itself. I was a former health insurance executive with WellPoint and Anthem, and a hospital administrator. So happy to kind of share a variety of aspects, but I know, we've had so many great discussions, Marcus. So we have so many things in common and share a lot of the passion. So really looking forward to today.
Yeah, listen, when I was thinking about who we can add to our cabinet of incredible guest hosts, I just started thinking about the conversations that we have had, and your career kind of says it all. But Health Further is a little bit of a different show in that we try to go pretty deep in healthcare, but we're also talking Web3 and we're talking, AI at a pretty deep level, and we're talking macroeconomy stuff. And it's not everybody that can go across all those different lanes and weave it all into one story. And I think you're going to be a real upgrade to our cabinet. So thank you for joining us. And if there's no further ado, we will go ahead and dig in. All right, first story is all about the Fed. So we are starting to get a sense of the style. Kevin Warsh, he wants the Fed to send fewer signals. According to the New York Times, that comes with risk. He basically was not giving a whole lot of insight on what direction he wanted to go in. And now, to be fair, FOMC is gathering at a time of war or maybe peace as a deal is being made. We had a 4.1 print that was almost entirely due to oil and gas prices, being shot up, and now we already have gas prices down below $4 in many, many places. And so it could be that just because of where he is sitting and given the instability in the world, he didn't want to give a lot of signals. Or is this just something different that we can expect from Chairman Walsh than we did from Chairman Powell?
I think it's a great question. And I know the market was actually, reading his signs. I actually was one of them watching the news. And I spent some time with actually 2 economists last week who were kind of preparing for this discussion. And they both kind of felt the same way, like, he's going to bring kind of a new wave of leadership to the Fed. He's probably going to be a man of a few words, but more around actions and data. And the feeling here is that he's going to be reading different data sets than maybe some of the historical Fed chairmen. So rather than just the inflation signals, I think he's going to be looking at a variety of market vibrancy issues. So I think we're going to have to kind of see how he presents them. But I think we are going to see here a kind of a new era of the Fed, which is few words, data-centric, and more importantly, using a lot of different measures to measure the health or the lack thereof of the economy.
I think that is going to be a welcome change for President Trump because, fewer words gives fewer opportunities for dissent between the two of them, right? I mean, he has a very tough job. He does need to maintain and maybe even project independence. I think this is the main question that people have when they're looking at his term as chairman. And to say less just kind of gives people less things to hang on. Now, they may not like it. They may want to be able to speculate more based on every single word that he says. But I think we saw that really impair Jerome Powell many times. You talked about data. And Jerome Powell often talked about being data-driven, but not necessarily comprehensive in the data. It's kind of a very few key data points. And there were many other data points that people would point to and say, hey, look at jobs, look at the stock market. There's all sorts of other reasons why, look at Main Street and look at how small businesses are doing. And so to me, it does feel like this combination of him trying to bide his time as things are settling in as we head into the midterms, and hopefully this Iran war conflict, does come to at least some significant slowdown. But I also kind of like the idea that maybe we will focus less on what the FOMC is saying every 2 to 3 months. That would kind of be welcome.
I think you're right. And we live in a world right now which is moving at the speed of light. So to say that we're going to wait for a whole quarter or wait for guidance from the Fed is actually nothing like the truth. I mean, look at all the recent news where I know we're going to talk about SpaceX and these things are happening and coming at us. And it's very hard for the Fed to say, let's just wait for a quarter and kind of evaluate how the market's going. And I think one thing we've learned about the current administration is they like to move things very quickly, week by week, day by day in some cases. And we've seen kind of the volatile stock market swings, oil price swings. So I think even the Fed is saying, you know what, we're going to stay out of that a bit. And I think we're going to let the markets kind of react. And I think as leaders, we need to kind of think about how we measure our reaction as well, because I think people are going to be looking for us for some stability. And I think the Fed is maybe going to be a great emulator here.
Fantastic. So let's move to what we all hope is the end of this conflict, particularly around the Strait of Hormuz. New York Times, oil prices fall as U.S.-Iran deal to reopen Hormuz takes effect. So there's all sorts of discussions about the quality of the deal, about whether or not, J.D. Vance is, quote unquote, taking credit for the deal because maybe the deal is not as strong as the administration and the president had hoped. But let's put all of that to the side for a second, and let's just talk about what the impact is going to be if the Strait of Hormuz is reopened and that reopening is durable. How do you think that is going to impact the broad global economy and our ability as innovators to sort of move things forward with any sense of predictability?
Marcus, I think we've all been waiting for this kind of point in the market where we can begin to look at a little more stability. We all went to, for example, we went to JP Morgan this year, and there was so much energy and excitement, and we were ready to do deals, and we were hoping for interest rates to settle. None of that happened. And I think the market is saying, you know what, if this can give us one sense of moving in the right direction again, I think we're all for it. And as a matter of fact, I think, not only did I think the president get a lot of pressure from, the current, war hawks or non-war hawks, I think he got pressure from the global community. And I think you heard it in his comments in the last 24 hours. He's saying, you know what, we can't take any more stress in the global economy. We can't risk another recession or even, maybe a little bit worse. But the idea here is we have a business to get to, the global business. And I even like in life sciences, I spend a lot of time with our clients. They're worried about the supply chain disruption again. Feels like we're going back into kind of this COVID era of disruption. I don't think we're ready for it. I don't think we want it. I think everybody wants peace. And I think the majority of the people, once they dissect the deal, and hopefully it stays, we're all going to get behind it as a global community.
Yeah, I like that framing because certainly you can compare this deal to the JCPOA and you can look at how much money we're giving them, and you could look at where Iran stands now versus at the start of the war. I think all of those are fair game, but the risk to the global economy, some of the threats that were being discussed around what was going to happen in Asia if we didn't get this thing open in the next 2 months, right? Just around power, around digging into reserves. I think ultimately those do take precedent over our domestic feeling around the quality of the deal, right? At the end of the day.
And I think people are kind of excited about it too, because what we've learned here is maybe we can build new alternate routes for energy. I think people are excited about even other energy sources. So, even though we had so much contained right now in where the oil supply is and where the reserves are, what this has also kind of taught the world is we do really need each other, number one. And number two, we probably need to find alternate energy sources and transportation sources. I live in South Florida, and a lot of times when you're down in Fort Lauderdale, I look out and I see the tankers just lined up everywhere. So, you can imagine, how many of these tankers are going to be lined up now that we're starting to get, the flow of traffic through. And of course, the whole Venezuela relationship also contributed to some of that hedging for us. So we are clearly now a global community, whether we like it or not. And this just proves the point.
Yes, a big geography lesson for us all. We all know where the Strait of Hormuz is now. We did. I don't think many of us did before this, but we all do now.
I know you travel to that part of the world, and you've probably seen it firsthand. So it is really remarkable. But I would say there's energy there, right? There's prosperity coming. I'd love to
Yes.
hear your
Yes.
thoughts on that because you see it when you go there.
Yeah, no. Listen, I mean, thank you for bringing that up. I canceled my trips to the region this year. I had a plan to go back to Riyadh and meet with many of the connections that I started to develop relationships with last year. And quite frankly, I mean, it just was not safe by the standards of our State Department, right? They couldn't guarantee the safe transit of U.S. citizens out of that region. So, like, the idea that I would go there, what I mean,
Incredible.
was just completely ill-advised. And so, I think this was frustrating on many, many, many levels. For the benefit of everybody who was not directly involved but was absolutely going to be affected, I'm happy, right? If for that reason only, I'm happy. I'm happy.
I like that humane answer because that's really, I think, where most people kind of settle on this topic. So.
Yeah. Okay, let's move on to SpaceX. There's so many things we could talk about this IPO. It is, by all measures, quite a successful and also historic IPO. Elon Musk, as a result of this IPO, becoming a trillionaire. I wanted to focus in on this Cursor deal. First of all, I think this deal doesn't happen if the IPO is not successful.
Right.
So because the IPO is successful, SpaceX basically gets a free option to buy Cursor for $60 billion. Cursor, for any of our listeners who don't know, is an integrated development environment for writing AI code. It basically is a harness for coding agents. And it was really the first one out of the gate. I remember hearing about Cursor for the first time on a Lex Friedman podcast before like any of these coding agents were even really a thing. And, SpaceX has had some successes and some failures around AI. I would say the successes are the build out of the Colossus data center, which they've been able to repurpose into an asset that they can sell to the likes of the leading frontier model out there, Anthropic. But also they've had some failures in that Grok has not been a competitive frontier model. And so now that they've had this incredible IPO and they're so well capitalized and are likely to be more capitalized as more shares are allotted in the tranches, they're going to start aggregating these really high quality, very popular AI assets that are out there, maybe not necessarily one of the biggest frontier models, but a company like Cursor gives them really, really, really strong positioning against the other Mag 7 companies. So if this is the first big acquisition that we see them do, how are you starting to think about a SpaceX as kind of like the new Alphabet, right? You know what I mean? It's a new kind of company entirely.
It's exciting. I've been, watching kind of space as an industry for several years. We hosted them at the Lake Nona Impact Forum for several years and actually heard from SpaceX executives and even Jeff Bezos directly. So we've seen this kind of maturity model coming. But what I like about this is it's combined the two most exciting frontiers right now in our industries, space and AI. And I think those two are actually going to go hand in hand because when you think about the acceleration, we're going to be launching more and more and more space flight. I think that's going to take a lot of areas. And, as I kind of looked at this one, there are about 4 or 5 areas like embedded flight, testing, telemetry, even taking some of the legacy code that the industry uses and bringing it to modern standards. This is going to be amazing. And I remember going to Microsoft one time and they said, look, Ash, the number one thing about AI is it's going to dramatically change how we code. We've always heard that. This is actually going to show us the way forward, and it's going to be done in a very practical way to actually accelerate development of space technology. So I couldn't think of a better way to demonstrate it. And I think to your point, 60 billion, I think we're going to be seeing more and more premiums for this kind of technology and probably other industries.
Yeah, and when you're talking about a trillionaire, 60 billion seems kind of small, right? I mean, he's got a lot more of those in his own personal war chest.
That's exactly well said.
People talk a lot about, it's not liquid, and I'm like, yeah, but stock spends pretty well too.
It does. And he's ready to, I think, to your point, catch up a little bit. Like he wants to, embed this into his platform. He wants to get Gronk, up and running. And I think more importantly, he's going to probably have to demonstrate to the industry that SpaceX is worthy of its, multiple valuations. So that I think there's a lot of people depending on it. Not to mention, the newly minted, millionaires and billionaires. So
yeah. Agree. Typically, when Vic and I do our VC rundown, we'll go into specific deals. But because you're such a great person to talk macro with, I actually went a level up and sort of looked at things that are happening across the private capital landscape. And I picked 3 stories that would allow us to talk a little bit about that. This first one from Fierce Biotech that says that the biopharma ecosystem is back to full health fueled by M&A. This is a PricewaterhouseCoopers report. Full transparency, I invested in a biotech company probably at the worst time, which was like right at the beginning of the bottom dropping out. It was right when Powell and the FOMC started the hike from, basically ZERP to 5.5%. For the biotech industry, capital is oxygen. It's not fuel, it's literally oxygen. Like that industry is dead if there is not accessible capital to continue to advance these companies because they don't generate revenue, right? They're moving science milestones forward. And so that Fed fund rate hike was an absolute killer. But Vic and I have been tracking more and more of the deals that are happening on the pharma side. And I think this is correct. I mean, I'm seeing a far more consistent M&A cadence happening across pharma, especially as many of these other big commercial players are realizing they got to do something to stock their shelves and stop Lilly from running away with the whole race. And so it's certainly in the GLP-1 space, but a lot in oncology, a lot in rare diseases, we're seeing. What are you seeing that's going on around this resurgence in biopharma and biotech?
I'm kind of with you on it. We've been patient here. I mean, even this article said since 2020. So many of us have been patiently watching this market. I would kind of give you kind of three things. Number one is certainly oncology, and recently obesity has always been kind of the top of the house here. But the problem is, as you know, those assets got overvalued and they've all been grabbed up in the market very quickly. So you have to kind of go into kind of a, step two. I'm so happy to see some cardiovascular, hits come into the market now. And I think I can only hope that it's also maybe tied to some of the administration initiatives. The whole access model, for example, is really built around cardiometabolic disease. So I think we know that this is a broad-based indicator of health in this country. And I think at the end of the day, the markets are starting to see it. What I like about these also is these are companies that have had experience and background in successful launches. They have the science to back it. In this example, the clinical trial is coming up in 2027, so it's a short time away. So these are like good bets. And I think if you look at the fundamentals of these, it makes a lot of sense. I still think the market is maybe a little bit slower on some of the early stage. And I think we're going to see that. My background as early days is medtech is where I went into it, and it takes like 20 years to get that through the FDA process. So I think if biotech, if we can pull it off in 5 to 7 years, I think we will all be very happy investors, and more importantly, we're going to start to see these drugs on the market. And I have to believe the administration is also loosening its grip a little bit on accelerating some of the drug launches here.
Well, we're going to talk about that when we get to the policy section. Let's keep talking capital. Kardigan buttons up $400 million upsized IPO to power heart drugs towards phase 3. So this is exactly what you were talking about in terms of focusing on the cardio sector. Now, there's all sorts of things that are happening here, right? There was that release at a scientific conference where Lilly's, drug in development, may be sort of a one and done ender to at least, some presentations of heart disease. But I agree. We are seeing many, many more things, but both on the health tech as well as on the biotech side, addressing what is the number one killer, at least in the United States, which is heart disease. $400 million IPO, it's not quite at the $1 billion level, but you talked about the pricing, and I kind of look at it and I say, okay, $400 million, that allows for a nice 2x if you have a decent 20% bump, and then it kind of, remains flat from that point. $1 billion, a lot of these companies are exiting at that $1 billion, $1.5 billion mark. And that gives you the room that you need for a nice 2 to 3x if they get taken out. So is this what you would like to see more of in terms of like the sizing of an IPO, the indications that they're going after? Does this feel healthy to you?
It does. I look for three factors. I look for that kind of sizing. With a kind of a reasonable upside. I look for solutions that are moving more towards cure rather than treatment. This is exactly that, and I think we're going to see more of those with the science advancing. And the third one is I look for clinical areas of specialization. I've been doing a lot of work, for example, with women's health, and we start to see kind of the dimensions of these drugs very differently across different dimensions of our society. So I think all of these drugs have a very, very good path forward. if biotech is the path forward. And I think when we look at those timing, size of deal, market, and then curative, this one really fits all three of those.
That's a great rubric. I'll have to apply that to my own IPO seeking. Let's talk a little bit about the FDA here. So the FDA's reversal on uniQure's gene therapy is another sign of renewed regulatory flexibility. So you and I actually hadn't talked about it. I was quite sad to see Commissioner McCary. I think he stepped down from his seat in the FDA. I thought he was a really, really reasonable, very smart, very principled person. But it was clear that there were a variety of different things, particularly with the people that he was picking to join his team. But I have to say, in the weeks since that was announced, we're not seeing what would appear to be, chaos at the FDA. If anything, it's just sort of a streamlining of how they are going to embrace more and more innovation, understanding that it's going to be coming at them faster and faster and faster. And a lot of it has to do with advancing the kinds of technologies that we're putting out on the street. I think if you go all the way to the end of the line in the thinking, it's that right to try, the ideology that seems to really be driving this. So this is approval for, a Huntington's disease gene therapy. And I guess before there was a sense that, okay, maybe it didn't necessarily show the efficacy. But I think because it is a rare disease that doesn't really have great treatments, this FDA is saying, let's reverse that decision and let's see what happens.
I love the fact that you've connected this to right to try, because I think they are connected. And I think even Dr. McCary, he's such a beloved person, but he probably had enough time to bring in good people in the organization that can, to your point, keep the momentum running. So I think there's kind of a combination of things here. Right to try, you've got a good, solid kind of field force in the FDA. And I think at the end of the day, as a health insurance executive, we always really struggled with a lot of these types of classes of drugs and therapies. They were usually very expensive. In some cases, you might have a cohort with some of these populations that really drove up medical spend. So I think there's also an economic factor that the administration is looking at. It's saying, if we can get some breakthroughs here, we can help level out the cost of these rare diseases and also the impact on small populations, even in the insurance sector.
I'm all for right to try. 100%. I think these things should be advancing, and we're going to learn. I mean, right to try also embedded in that is right to take risk.
That's right.
Is right to take risk and right to weigh risk against doing nothing, right? Which in many of these cases is certainly a sure path to passing away. And so this is something, and as I scan through the article here, it does look like this particular decision was made under Commissioner McCary's authority. So
the other part I'd put on it here is these programs work really well with real world evidence and the data around it. And if we really believe in the power of AI these days, especially with interoperability and access to electronic health records, certainly what CMS is doing, the access to real world evidence is going to be, pretty interesting. And I know we've even talked about the use of synthetic data to get it kind of over that final hurdle and to accelerate that. So I think if they do this policy change, but kind of embed it with some of the other things that we'd like to see, use of AI, real world evidence, synthetic data, I think we might actually be in for a really, really nice, pleasant change of attitude and also results.
Yes, agree. All right, we're going to go into a run of stories around health systems, and a lot of these are coming from Becker's Hospital Review, so I'll just say that the next three stories are coming from Becker's. First one, rural hospitals told to hang on, in quotes, as facility closures free up transformation funds. So I think unless you've been living under a rock, you know that maybe the one bright spot for hospital leaders from HR 1 is the $50 billion rural transformation program. And it's there to transform. It is not there to just be a stopgap for organizations that are already on a pathway to closing. And I think this article seems to be emphasizing that very fact, right? Which is to say, as some of these weaker hands get shaken out, and I hate to say it that way because we're talking about cornerstones of communities where people are employed and people are cared for. But I think we all know we've looked at the state of rural health. We've read the reports. We've seen the trends on the closures, and we know that this $50 billion is certainly not enough to keep them all around. And it was never measured to be that, right? It's measured to transform the way that we deliver care in rural America. But it looks like different CEOs are reporting that they're being told to hold on as some of these, closures will streamline who should actually be front of the line. And so I don't know, I don't mean to say Hunger Games or anything like that, but it does feel a little bit like that, at least from the perspective of some of these rural health CEOs. And I will just say one other thing. I've been doing a bunch of hospital association keynotes here lately, and the difference between even a not so happy but well positioned health system, in good markets with a reasonably decent payer mix, even if they're a nonprofit, versus these rural hospitals is absolutely night and day, right? I mean, I was at one hospital association, and there was one organization that the day after that event announced the partnership with General Catalyst, and there was another one that said they have not done one single thing with AI yet. That's right. And so you cannot have a bigger difference between those two organizations. So Ash, what is your general feeling about the $50 billion rural health transformation program, and what the trauma is going to be like as we work through the fallout of those facilities that can't make it, as versus the ones who are selected to help transform what care in rural America is going to look like?
I love the way you split this up, Marcus, because they're kind of two separate but parallel paths. One is clearly the $50 billion rural health transformation program, which is part of HR 1. The other one is the future of struggling rural and safety net hospitals. And the two are interlinked, but kind of different. I was in DC right when they were negotiating the final throes of HR 1, and many of the senators we met with were like celebrating that they got the $50 billion and congressmen and women. And I think they were very excited about it. The issue with it is it's still tied up in kind of the governor and the state and the application process. And by the way, not only health systems have applied for it, there have been private entities and various funds and investors and tech companies. So it really is, I think, defined, as you said it, an innovation fund. And it really is intended that hopefully that 50 billion can drive, 250 billion or 500 billion. So I would hope that the, this hang on idea is really difficult, because you're asking an organization that might have one day cash on hand to hang on. and their idea is we're hanging on every day, every week. And
right.
So I think maybe there needs to be another conversation that says, in addition to the innovation fund, what can we do to help health systems that are in a meaningful way to help them hang on? And right now, in lieu of the federal government helping them hang on, many states are creating an olive branch, but those budgets are going to start to get hit pretty soon because those olive branches are becoming bigger and bigger and bigger.
Can I ask for your commentary just from a political strategy perspective? We know that next year is going to introduce some pretty significant cuts that will come from the top, but that will certainly filter through health systems around this country, as a result of impairments to supplemental payments and other things as well. But we also know that they have not been felt yet, because it's 2026 and those things have not yet happened. I don't think they're really going to be meaningfully felt before the midterms.
That's correct. That's correct.
So how do you think about what happens next year post midterms, once all of this really does start to settle in? Because the rural stuff happens in like onesie, twosie. And I don't mean it's one or two at a time. I just mean because they are not part of much larger networks, it's harder to see or feel the impact in any concentrated way. Whereas when some of these health systems have to re-underwrite, viability, right, they are going to make meaningful 9-figure impairments to their current P&L, right, on the expense side of the ledger. But I think for a lot of them, that's not coming until December, at the earliest.
They're doing some things now that to your point, may not be felt at the national level. Like I was with a rural health system the other day, and they were closing down their cancer center. They were in, rural Kentucky. They closed the cancer center, and they said, we're not making enough money. We can't run this thing. And they opened up a pain clinic instead. So it's things like that communities are going to see changes. To your point, when we aggregate them, we might be able to measure them nationally. But I think, to your point, this year, local communities are going to feel changes in service, access to physicians, and I think in some cases, closures of facilities. But the real cliff, I believe, is coming at the end of this year. So I think as we get closer to the election time, We know that healthcare is, a number one or number two issue in most people's minds. I think it's going to start coming out in some of the rural communities. I think it's going to be a bigger part of the constituency. That same constituency that forced HR1 to happen is going to start getting vocal around the viability of their local hospitals.
Yeah, I mean, it feels like this was, HR1 was ultimately championed and driven through by the House.
That's right. That's exactly
You
right.
know, it was by the House. And it's like, when I think about the House, that's when I think about rural America, right? Like that's where rural America is truly represented. It's in the House. And so it just seems to me like the timing of all of these things, I can't quite sense whether or not this issue is going to be sort of an October surprise, or they're going to get it under the radar just in time to get past the midterms, and then it all sort of bubbles up December and first quarter of next year. I just can't tell, but I'm not as close to it as you are.
I think to your point, which is maybe the other calculus of the administration, is we got to get past, if oil prices come down, people see the relief in other areas, they're going to, maybe try to look the other way for a moment about their healthcare bills and healthcare access. But I think that's going to be short-lived. I mean, our healthcare crisis is probably something that's generational, just like we saw, in the 50s, the push towards building hospitals. We're going to probably need something like that again in 2027. So I think that's probably where we're going to end up as a country.
Okay. Here's a story I could not be happier about. This is from Becker's Health IT.
Yeah.
Trump administration ramps up information blocking enforcement. So I think I said this on stage at that panel that we had. This is one of the least understood impediments to healthcare innovation in the United States of America, is that these healthcare IT vendors are allowed to information block. They are allowed to, just because the pain, the enforcement and the pain is not more expensive than the upside of locking out competition, right? And the truth is, a lot of innovative health systems, the people who want to move things through, they can't fight a multi-year enterprise-wide contract with one of these major EMR, vendors. They can't do it. And so they may find a company that delivers exactly what they need for their service line, for their department, to improve patient satisfaction, to enable them to try out a new value-based care model. And so many times they can't do it simply because of information blocking. And so these are certainly the things that the Trump administration has been really, really good for when it comes to advancing, healthcare innovation, all things around fair competition, open markets, price transparency. They seem to be at a pretty high cadence, rolling out this increased enforcement.
I think, it mentions Thomas Keane here. I was actually in that same session in DC when he presented this, and everybody was kind of excited. As a matter of fact, I was sitting at the table with some of the executives from the big HIT vendors, and they were all a little bit nervous about this. I mean, to your point, are they going to enforce it? It sounded good on paper, but how are they going to do it? It sounds like they are really going to do it. And I think this administration, one thing we've learned is when they say something, they're going to do it, and they're going to, really roll it out in a big way. I would say there's going to be maybe people on the sidelines, people winners, losers on this. But remember, the federal government has a big stick, and the big stick here is Medicare. So they can say, and that was always the vision of why they implemented, investments in EHR in the United States, is because Medicare felt that they needed access to that data. So they can basically say, you know what, we spent money, we gave you the stipends to help you with the EHR Modernization Act. Now we want to see the data. And I think that's going to be the big stick that they're going to start, pushing around with this enforcement action.
I could not be happier, and it couldn't happen to a nicer group of people. Let me tell you. Let me tell you, I'm all for this. Okay, 23 health systems are dropping Medicare Advantage plans this year. This is a continued trend because this really started last year. I feel like last year it was largely concentrated around Blue Cross Blue Shield plans, but it seems it's now just kind of going more broad. When you look at the list here in this Becker's article, United Healthcare is listed, Aetna is listed. Where are we headed with all this? Where are we headed around with MA, Ash? I've just seen the chaos around it, but I don't know that I've talked to anybody who has a good sense of where this is going to land.
Well, so I think historically, a lot of the payers used to have what I call a combined contracting strategy. So they'll go in and they'll say, you know what, I'm going to give you a really good commercial contract, and that's going to be paid for by the employers of the country. But I'm going to ask for some concessions on Medicare Advantage. And of course, you're going to get what you're going to get with Medicare. And then if you want to participate in Medicaid risk, that's yet another lever. Everything is all tied, obviously, as you know, around Medicare pricing. But what the providers are saying is, we're not doing that. Every product has to kind of stand on its own. As you know what, as business leaders, Marcus, you and I look at that way. If I have a service line that's struggling or a product that's struggling, I've got to really reevaluate it. Do I need to be in that business? And I think that's what they're doing. They're treating each one of their lines of business as they need to be profitable on their own. And if they can't, they have options. And I think the administration maybe is allowing this to happen, frankly. They are saying to payers, you know what, if you can't run this Medicare Advantage program, even though everybody likes it, people are always going to go back to Medicare as option B. And I think you're going to see both of those play out over the next several years. And I think providers are saying, you know what, I prefer to take Medicare than Medicare Advantage. This may be like the HMOs of the 90s. It may be that the payers overplay their hand and they might see a pushback from providers and maybe even beneficiaries who are saying, we don't want the stripped down Medicare Advantage plans anymore. We want the thing that you gave us, or we're going to go back to Medicare.
Is there any calculus that they are timing this? I think about I'm in Mexico City at the moment. I kind of go back and forth between here and Nashville, and the teachers union across the country of Mexico sort of very strategically chose the World Cup as a time to strike, right? Because they were going to have the eyes of the world on them, right? And when I look at what's happening here with MA, obviously this administration has been very aggressive in analyzing what's happening in MA, particularly around payvider engagements. And do you think that the providers are looking and saying, yes, we need to look at all this stuff on its merits? And while MA is not that popular in terms of the way that the big payers have been delivering it, this is the best time for us to make our case, drop these plans. Obviously, everyone's going to try to come back to the table and figure out how to make it all work. But do you think that there's some amount of timing it along with the additional scrutiny and analysis that the government's doing?
I think there is. And I think, we're also seeing more and more retirees, kind of being forced into this. I always tell people, I said, sit down with your retiree friends, colleagues, family, and walk through the pricing. You'll see some amazing, options for them. And a lot of people don't have the money saved as seniors. So what's unfortunate is they're choosing these plans because that's all they can afford. Now, I think on the backside of it, health plans might be saying, you know what, I can do this as well. But it is going to be the payviders. It isn't just going to be the normal contracted rate between a health system and a national payer. It is going to be a payvider that might step into it to say, I can do this better. I can take risk. I can create a much better network, and I can create a wellness product that actually starts to keep these seniors in a much better place throughout, the best part of their life. So.
All right, this is going to be fun to watch. All right, moving into the payer side. PBMs, Express Scripts and PCMA sue to block Tennessee law breaking up PBMs and pharmacies. PBMs have had no love for several years now. Mark Cuban has certainly been very effective, along with, some nonprofit lobbying organizations in exposing the PBM business model, right, to the general public. And yeah, I think it has become an easy political win for politicians to say, hey, these PBMs are not fair. They're rent seekers, they're middlemen, and we're not going to play by their rules anymore. We've seen some forward steps by the largest PBMs. Optum comes to mind in going full transparent, right? So that's obviously some great upside for the pharmacy industry. But here we have Express Scripts and the PBM lobby kind of fighting back and suing. Do you think this has got a shot?
It's been very contentious. As you know, I was with one of the large insurers when it was announced, when Arkansas first announced this legislation. And I think shortly after that, there were 22 attorney generals that signed on to very similar legislation. So they've been nervous about it for some time. So I think they've been kind of building this, what I call fight back, like you laid it out here. And I think it kind of goes pretty broad. And it isn't just PBMs. They're saying you can't own retail pharmacies. You can't own a variety of other pharmacy services. And I think it is all entrenched in that transparency initiative that you mentioned that Mark Cuban and others have really been promoting. I would say that this administration has also been behind a bit of this transparency push. They probably weren't going to get behind the breakup of the PBMs necessarily, but I think they will definitely let this transparency discussion go further. So the question is this really going to hold? Is it going to be required to divest? I think it gets down to the issue of how are we going to service our consumers. Many of us have been using PBMs for the majority of our career. Many veterans rely on PBM distribution even for federal benefits. I think they're a very important part of our distribution network. So I think if you say we're going to break it up, you still have to keep the PBMs viable. And as you know, all the PBMs have been now owned by the top 5 health plans. So there has to be a plan B. And right now, there probably isn't a reasonable plan B if this actually seeks a successful litigation.
Ash, one thing that I get concerned about, Vic and I will often talk about, we were not necessarily in favor of the pure position that mergers of hospitals are bad, right? Because we understand that they do remove consumer choice. That is a very real outcome that comes from many of these mergers. And you can see prices going up in markets. I don't think any of that is questionable. And you also have so many hospital closures, right, that you have to also consider that sometimes mergers save a community from having, a hospital at all, right? So even if the price goes up, it's like, would you rather the price go up or would you rather the facility go away entirely, right? And so I bring that up as an example just to say the dynamics of healthcare are a little bit weird. You even talked about it just now when you were talking about the way that payers would negotiate sort of multi-plan deals with providers, and they would say, okay, hey, here's a really great commercial plan, but I'm going to ask you to take some concessions on the MA plan, right? And healthcare has sort of evolved to this thing where most of these organizations lose money in one area and make money in another area, right? And it's like when you blend it all together, it hopefully ends up being a profitable enterprise.
That's right.
I don't take issue at all with looking at some of these less than ideal functioning components of the healthcare ecosystem that maybe take a little bit more of their fair share than they should, making them more transparent, making sure that the general public is equipped with proper price discovery, not being locked into a certain set of prices without any optionality to move out of that based on the plan that they have. I'm all for that kind of stuff. And at the same time, I also understand that if you take too many of the profitable legs out from under these companies, they fall because they are certainly doing things that make no money or in many cases, certainly with health systems, lose money, right? Do you worry about any of that? Because that's a level of nuance that only comes with being a healthcare insider, and very few people have time to be a healthcare insider, but they certainly have enough time to get mad at getting robbed.
I think you're spot on. And I think the pharmacy business is one of those legs of the stool. So whether you're a health system with 340B, whether you're a payer with a PBM, or whether even life sciences itself, you rely on all of these instruments to be able to create a successful distribution network for your products and services. And I would say the other angle I would just say is as a consumer. Okay, imagine if in Tennessee we shut down the PBMs. Is everyone going to go wait in line at their local CVS and Walgreens and Walmart? I mean, the lines are going to they're already long now. Imagine if you can't get your medicines delivered to your home. So these are the kinds of things that I think we all have to see that in the balance, these were all created to balance out our portfolio and also to create some consumer, capabilities that are actually, pretty well enjoyed by many people. That does come at a price. Now, I think it's fair to say maybe we make it more transparent. I think everybody would agree with that. But I think to go down the legislative route to begin to shut these things down might be a step too fast or too far if transparency doesn't maybe do itself its favor.
Yeah, at this moment, I think if we can, everybody should be able to. Transparency should not make your business less viable.
Exactly.
Right. I mean, as a pure principle of the free markets, transparency should enable price discovery, period. End of story.
That's right.
And then you should find margin through innovation, efficiency, how you source things, how efficient your supply chain is, and things like that, right? It should not be cartel pricing, right? That cartel pricing should not be the mechanism for profitability. So I have no sympathy around the idea that this industry shouldn't be as transparent on pricing as every other industry that we deal with, right? In a free and open market. But I think going beyond that and saying they can't exist or they can't own certain things to gain those vertical efficiencies is an entirely different step.
I think you're spot on. And I would just say this industry spent a lot of money over the last 25 years. I remember, when I had a company, we actually helped the very first Merck Medco install their pharmacy of the future. And imagine they had like IRS level scanners, they had a CRM system, and this was in 2000. So, it's a wonderful kind of idea to think about how this industry, but they've also made big investments. And I think we also have to kind of say that, it's easy to look back and say these industries wouldn't have been created had they not had the free enterprise system behind them to allow themselves to make these big investments.
Yep. All right, I'm going to skip to a story here about Advent Health. They're retrofitting 13,000 rooms across 57 hospitals, the largest smart room rollout ever. I learned really about the smart rooms through my friend Bruce Brandis, who regularly listens to the show, when he was working at Care AI. Stryker ended up buying Care AI, and obviously they've got incredible contracts with health systems around the country. And they were sort of moving this smart room renaissance out into the hospital space. Ash, can you just share a little bit about your understanding about smart rooms and what it's going to mean as more and more of these health systems move to a smart room model?
I think it's a great idea, and smart rooms have been kind of on the development block for several years now. Most of the EHR vendors have smart room options where you can begin to expand the capabilities. There are third-party vendors that have also taken very unique camera setups and retrofitted television sets and really created kind of secure environments to integrate with third-party software. And again, if you even think about, the other day I changed my cable box setup for my home Wi-Fi. And even the Wi-Fi has an ability to do, location management, and they can even understand who's in a room and who's moving. So we have a lot of technology at our disposal to allow these rooms to be much more efficient. But at the core of the value proposition for smart rooms, it's about labor. So if that room can begin to diagnose and see patients in a more consistent setting, preempt patient falls, look at what's happening in the motion and actually create better staffing models, even offering nurse sitters the ability to maybe relieve some of their staffing constraints. I think they have a really, really direct ROI, which is really the question of this article. If you're doing it across 13,000 rooms, is that really the time to do it? Now, I would say Advent has also been very innovative. I've worked with them. I was just in Florida. They were getting ready to open up their hospital of the future in Lake Nona. So this has been a very, very big part of their strategy. When they build new hospitals, they build new hospitals of the future. When they're retrofitting rooms, they're expecting the latest and best technology. And I think this goes to the adage. If you have an EHR environment, if you have a technology environment, this is about keeping it modern, moving to the latest and greatest technology. And this is really where AI is really going to take off, I believe, because this kind of data is going to be amazing as we look forward.
Okay, Ash, I'm gonna pull off of our script for a second here because you mentioned Lake Nona and Care AI was based in Lake Nona. We haven't talked about Lake Nona in a while. I feel like prior to COVID, there was a lot of talk about Lake Nona, and now it's more like insiders who know, but it hasn't sort of kept the same buzz. What's going on in Lake Nona these days?
Yeah, it's a great question. So, as you know, it was really a kind of a development vision that Tavistock Group had. And they really wanted to build a health and wellness community that was anchored in technology and also brought the vibrancy of a connected, infrastructure to play. And it's been like 30 years in the making. So it is finally now, you have the VA hospital of the future there. You have HCA's hospital of the future there. You have Advent's hospital of the future. As you know, they've had amazing incubators that have been incubating new technology and startups. And I think they're also using automated vehicles. There's a house of the future that they built. So it really is less about, the vision of these things, but actually putting them in reality. And as you know, when I was at KPMG, our innovation center was there. We hosted the big event every year. And like you said, it's now kind of become the Davos of healthcare. People come from all over the world, and politicians and leaders and heads of state come to collect their ideas and thoughts. And I know we're going to talk about wellness and longevity, but Lake Nona was one of the places that kind of launched the whole wellness and longevity, capabilities, and I think they also launched the X Prize for longevity as well. So it is really an exciting place, and I just love going there. I love seeing my friends there and my colleagues, and I like seeing the vision of what healthcare and a great community could really be like.
Well, maybe you could help me out because, like, I would go, but I never had like a real great anchor with which to go there. Maybe you can help get me connected. I'd love to go once a year.
Yes. Yes.
And just make sure like I'm getting connected into that ecosystem because it is a really impressive place and you can feel it when you're there.
Yes.
But it's I don't find it to be like this healthcare VC hotspot. You know what I mean?
That's
like
exactly right.
it's got legitimate university. I think UCF has a really big platform there. Right. It's got legitimate large company like Johnson and Johnson and some of these other types of firms. I think HCA's got maybe their big innovation hospital.
Guidewell
is Guidewell. Yeah. So there's definitely big things going on there, but we could talk about this offline, but I'd love to get plugged in more.
We'd love to do it. Maybe we'll make it an HFMA venture for us to go out, and we'll do that together. And
I like how you think.
If Gloria Caulfield's listening, we'll reach out to Gloria. We'll get that invitation together.
Awesome. Okay, let's go ahead and jump to the longevity story. You mentioned X Prize. I think we've got a decent overlap in terms of listeners of our podcast with Moonshots, and that would be the place where every single episode you will hear Peter Diamandis, trumpeting the bold future of longevity. This is a story from Axios. The headline is "Longevity Medicine's Do or Die Moment." I'll just read this first sentence here. The world's first human trial of whether a drug can essentially make a person's cells younger sets up reality check for one of the longevity field's most promising theories. And anyone who's been listening to these longevity focused podcasts, Peter T was probably like the biggest for a while there, and he was talking about metformin and what these different small molecules can do to advance. It does feel like we have the intersection of a few things here, right? Obviously, artificial intelligence is going to dramatically advance this field. We have a resurgence happening in biotech, but then I think also we've got like a growing public belief, probably even more so than Peter Diamandis, Brian Johnson, who has made it onto Netflix with his idea of don't die. It's like this meme of longevity is getting more grounded. Right, it's getting more grounded as the announcements of Lilly's discovery, where it might be one and done. You talked about more curative than treatment. It does feel like this is all starting to become far more real. Like it's not quite there yet, but it's all starting to become far more real. But moments like this are pretty pivotal, right? When we do have a human trial, and now we're going to see whether or not the best of what we have right now can actually reverse aging. So you've been close to this space. I mean, how critical is this? Is this just going to be seen maybe as, Blue Origin just had a rocket blow up and okay, it was just a rocket, no big deal. We're still going to go, is this a really big deal? And if it doesn't go well, could it impact things? Or is this just the beginning of many, many trials that we're going to see putting shots on goal towards this end of longevity?
I think it's a great point. And you said, Peter has been a huge advocate. So if you watch any of his energy and excitement, he's off the charts about this. So, but I would say kind of two things. We're going to see this world continue in kind of two paths. We're going to see the industry continue to advance. For example, the use of hyperbaric chambers, the use of stem cell replacement. I mean, the other day they said, you know what? Your own body can create its own stem cell replacements, and we can use it to inject joints and do some amazing things that maybe they won't reverse, but they'll definitely stop and accelerate healing. So the idea here, and the other day, Marcus, we were at the session at HFMA, even the chief economist who did our presentation said, we're all going to live well into our 90s in the next 10 or 15 years. And by some estimates, 115 to 135 years in the next 50 years. So when economists start looking at it, that there's probably some glimmer of truth here. But the other side of the coin is the FDA is going to continue to be critical. And I think, if we don't have 15 or 20 years of longitudinal studies, they're going to come back and say some of these things may not be viable. I would just say, I think, I live in South Florida. I've seen a lot of these things. People are going to continue to try them. People will continue to invest in them. They might be in this country, they might be in other countries. But I think we're going to see this energy around it. We're going to see seniors who want to live more viable lives. We're going to see transplants that are going to become a bigger and bigger part of our society. Maybe in the next 5, 10, 15 years, these transplant banks are looking at growing cells and regrowing organs. These are things that are going to be in our lifetime. We may not be the beneficiaries of the long, long life behind it, but clearly our children and our grandchildren will. And I think that's a bet that many people are making right now.
Okay. All right. I'm certainly into it. I think when I was being more of an active athlete, I had much more incentive to be in the restores and be in the hyperbaric chambers. And so I've tried a lot of these things,
Right.
And it does feel though that there's a level of science that seems to be emerging right now, and it's not just for the purpose of longevity. I see a lot of it around ending chronic disease. That does feel like it's making this idea that if you're around our age, if you're Gen X, wherever you thought you were going to live to, like you might plus that by 10%.
Yes. That's right.
It just seems kind of realistic at this point,
That's right. What I do feel a little bit here is it is also going to create a little bit of a haves and have-nots society in healthcare. So, we just talked about, Medicare funding and this is going to be kind of the societal question is if it's, and we're already seeing it now with GLP drugs. If GLP drugs are that good and they're helping our society reduce inflammation, and we should make it available to the broad part of our society. So I think we're going to really hit the wall. The do or die moment is actually going to be probably about how this fits into our societal norms and are we willing to make the investments to help all of society, not just creating haves and have-nots.
Couldn't agree more, and perfect segue. Okay. Stat News. Trump's obesity drug plan creates a temporary Medicare program that may be hard to end. Weight loss drugs will be available to adults 65 and older in Medicare for the first time next month. So exactly what you were just talking about. We're going to pay for this, right? And I think we've seen the calculus be generally supported in a bipartisan manner where people are realizing these GLP-1s are as close to a miracle drug as we have had in recent history, right? In terms of something that is so easily accessible and has so many indications that are helpful versus the risks to them, right? And so it's like, listen, the all-in cost of what happens at end of life that Medicare is currently paying for, I think there's plenty of economic models you can put out there that say, just pay for the GLP-1s now. Now, of course, you're going to have to work on, restructuring the group buying arrangement, if we'll call it that, right? You know what I mean? This group buying arrangement that the government is making on behalf of everybody 65 and older, with the pharmaceutical companies producing these drugs. But still, I mean, you got to think that there's some math that really does work here, right?
It is an amazing math, and I think it's not just about the weight loss, but it's about reducing inflammation in the body and actually giving people a chance to reverse things like sleep apnea. We're even seeing kind of a lot of other therapies that are starting to kind of emerge out of this. So I think it's a really, really important, innovation. And I kind of remind everybody, these drugs have been around for about 15 years. And over this last kind of, 5 to 7 years, we've seen the most current generation be highly effective. And now, of course, we're starting pill form. I love the fact that, by the way, I love celebrities now kind of coming out openly and talking about, Serena and Charles Barkley. Serena, by the way, was at Lake Nona this year, and she came out and talked about it. And look at her now. She's back playing on the professional circuit with her sister. So, I mean, I have to kind of look at that and say there are going to be a lot of mentors that people are going to look to. And it is now something that is kind of out in the open. And people are going to say, you know what, if it's good for Serena, maybe it's good for me. I want to take it. I want to go back and play tennis. I want to, live my life in a better way. And I would say the administration is not just doing it this. I mean, we've heard from, RFK. It's also about, the quality of our food supply. And so I think it's a multi-pronged strategy. When we were together just last week, Dr. Oz was, of course, saying, look, we have to make this country better. And if this is one tool in our arsenal, then I think they're going to use it.
All right, hard right turn to Web3.
Yes, yes.
CoinDesk. And I know you love this stuff. So Fidelity joins Wall Street's race to manage stablecoin reserves. Fidelity actually, I would call them sort of a fast follower, right? They were not the very first established brand out there, but pretty quickly they came out there with Fidelity Crypto. And now here they are with a stablecoin reserve money market fund. So there's a lot that we could be saying about stablecoins, but maybe this is a good time for you to offer your general view on the traditional finance world's embrace of blockchain and in particular stablecoins.
I think you're so well said. And we've seen some of the examples earlier this year of the credit card companies using points and moving them to kind of a cryptocurrency. So stablecoin is going to become part of that mainstream financial system. I would say the current administration's push to create more and more, regulated and acceptable environments for these currencies to be traded in is also part of this calculus. I think, as a former Big Four partner, I was highly regulated in this space for many years. So it kind of gives you a sense of if the incumbent financial institutions don't go where Fidelity is, it's going to be hard for the industry to go. I look at it as a very positive. I agree it's a little bit late coming, but I think it's going to unleash the wave of traditional finance accepting, stablecoin as part of their financial futures. And I think, it's interesting. Many young people are already there. So if we want young people to save and invest in their future, they're already there. This is the way to get them involved. I know they just announced the Trump accounts. I have to believe at some point in time, there's going to be some kind of stablecoin trading option in your Trump account as well for our children and grandchildren. So it's coming, and welcome to the party, financial organizations, because I think our younger generation's already there.
Totally agreed. Now let's talk about the other side of that, which is the political angle to it. So stablecoins, as they've been rolled out under the Genius Act, I think have become a very smart strategy for two things. One, bolster the purchase of U.S. Treasuries, right? In order for you to be a legitimate stablecoin in the United States, you have to be backed by U.S. Treasuries. And the second thing it does is it allows free-flowing distribution globally through all these new networks that are not SWIFT networks or Visa or MasterCard rails, but all these new networks of the U.S. dollar, right? So it's extending the life of the U.S. dollar by making sure that these new networks are not relegated to using Ethereum or Bitcoin, which are not really, they're not by definition stable, right? They are highly volatile. But I think along with this, there has been a lot of fear, and I think particularly, with people on the right around a centralized digital currency, and I think that is particularly because of the tracking ability that would create, right? I mean, if I go to the ATM and I get some cash and then I go buy a hot dog at the stand, there's really no way to sort of track that. But if we move to a world of centralized central bank digital currencies, every transaction we make is going to be trackable by the United States government. I mean, you won't even really have to file taxes because, you'll be paid in a way that's totally tracked and everything you spend will be totally tracked. So the House and the Senate have struck a deal with this housing bill to ban CBDCs through 2030. I think that's probably going to be, welcomed by all. But is there any aspect of this that is, kind of making sure that they are very, very safe with the other aspects of things they want to get done, such as Clarity Act, right? Some of these other things that people have been concerned about as they move into the midterms.
I think you're spot on. Again, it is a populist issue, as you see. But people do want that flexibility of these asset classes. It's interesting. I track the cyber industry, and a lot of our clients actually have investments when they actually have to pay cyber criminals some of the fees. So, we are already seeing kind of a global market that's trading in these currencies that's working within kind of a very acceptable public system. So I think we're going to have to find a way through this to regulate, but allow these innovations to go forward. But ultimately, you said it so well, it is going to be about tracking. And what better way to track than these modern technologies, because they are built for it. The whole token model is built for it. It is auditable, And I think we've seen anything right now with the administration's focus on fraud, waste, and abuse. It is about getting to the tracking mechanisms to make sure that we have a global compliant currency model.
Agree. Coinbase is launching tokenized US stocks backed 1-to-1 with holders able to receive dividends. I mean, this thing is moving so fast. And Coinbase seems to always be at least a half step ahead of the regulation. And so here we are. We just had this IPO for SpaceX. There were many, many SPVs in there, many different forms of how people got access to this thing on the private markets before it went publicly. But this has all been a discussion around how do we expand access to these stocks, right? And here Coinbase is launching, tokenized stocks that are backed 1-to-1 with real stocks, so they're guaranteed. And Coinbase is very, very good about their regulatory priorities, and so I think their brand has become pretty trustworthy with this, with holders able to receive dividends. Coinbase was once known as a place where you would buy Bitcoin and Ethereum. Robinhood was once known as the Gen Z place to buy stocks. We saw Robinhood make a real push towards Coinbase around adding more crypto. Now here we see Coinbase making a move towards stocks, but in a way that is authentic to them, making them tokenized. How are you feeling about this new finance world that's evolving and the role that players like Coinbase are going to play in it?
It's exciting. Again, for our younger people, this is going to give them access to the capital markets. It's going to give them access to reuse their Coinbase assets. You and I were talking about even the credit cards that are associated with it. So it's really creating kind of a very convenient model. The other day I was with one of my friends and they were showing me how easy it is to move assets through the Coinbase infrastructure to make investments. And now they're just taking the next logical step to be able to acquire US-based securities. So I think kind of going back to your earlier topic, it is about creating a global economic infrastructure that is not only tied to the US dollar, but also has assets around it, including tokenized, cryptocurrency. So, I mean, we've talked about leading in AI. We've talked about leading in so many areas. This is one area that the United States can lead in our financial markets to continue to secure our place as the preeminent global market for financial securities. So I think it's about a global existential threat right now and being able to manage forward with some of the best assets.
Before we move into AI, we share the honor of being on the board of the Healthcare Finance Management Association. And, obviously a ton of money moves through that ecosystem. What are your thoughts just at the highest level around all these innovations that are happening in finance, like in real time, right? This is no longer on the fringe. We have all the stock exchanges are moving to 24/7, 365 trading because of these new rails that we have, right? So how do you see healthcare finance benefiting, at a high level from these advancements in the way that finance is leveraging technology?
Marcus, I love this example because if we can, at scale, do the things we just talked about in the financial systems, we can bring that directly to healthcare. And to your point, healthcare payments. We're talking about more than $1 trillion of our economy flows through these payments. And today we can talk about interoperability, all these great things. But at the end of the day, we still settle claims. We go through clearinghouses. We have delays. We use the banking system, and we're still cutting checks. That is an incredibly inefficient model. So imagine if we took what Coinbase is doing and we added the infrastructure that we use for crypto, which is essentially tokenized payments. And on one side, I could create an electronic health record feed. And on the other side, I can create a claims feed. And those two can be separate, distinct, and auditable and secure for both parties. To me, that is the future of healthcare finance. And we can unleash a tremendous amount of savings, operational resilience. We can reduce fraud, waste, and abuse. And we can actually move to a much more viable healthcare system. We talked about savings, all kinds of things. If we do this in our generation, it'll be the biggest gift to the healthcare economy we can all give. So I am so excited about that. And you and I having those conversations, bringing a coalition together. And I think tech is ready. Banking is almost ready. Finance and insurance is going to learn more about it. And I think we are poised for this. So this is probably one of the most exciting generational changes we're going to see.
And I'll just throw one final, benefit on top of everything you just said. Couldn't agree more. When people start to better understand why tokens exist, they will understand why Bitcoin hasn't been hacked.
That's right.
It's called a security budget, people. Um,
Right.
and if there's one thing that healthcare data needs, it's better security, right? And you could look at a million ways to do that, but one way is simply just move to a more fundamentally secure technology underneath it all, right? So I'll leave that there and make sure we spend our last 5 minutes running through our AI rundown. The first story has to be around Anthropic and Fable. Last week, Vic and I talked about Fable launching. He and I had access to it. We ran a couple of things, and our general view was it's super powerful, but man, all these models are really super powerful. And I don't know about you, but I don't have all PhDs on my staff. You know what I mean? I've got some interns, I've got executive assistants, I've got partners who are, they're smarter than me, but maybe none of us are PhDs. So it's like, Fable's like mind-blowingly smart, and you don't necessarily always need that level of intelligence. So that was where we were going with the story last week. But little did we know that within 24 hours, Fable was going to be ripped from all of our hands, right?
Yeah.
And really because there were credible threats, as had been identified by the government, that you could jailbreak it, and so it was shut off. And leaders across the G7, really the story that emerged was this worry that, wow, the US really is the dominant power in frontier models. And if they can sort of stop these models from getting out there, but keeping them totally within their government's reach, this is like a huge issue for us, and our own ability to remain, competitive and sovereign and secure. And so this took a left turn. I certainly did not expect at all when Fable got announced, last Wednesday or Thursday, whenever it was. What are your thoughts about this?
Well, so I have a little bit of a jaded view on this one because I think the U.S. still has a bone to pick with the EU on their enforcement of kind of their the tech companies, U.S. tech companies. So I think it's kind of in that category of they're still going to kind of push as much as they can to get that. But I would say they're also looking at the future, and these languages, I believe, and just coming out of this Iran war, we are learning that these are going to be the fundamental technologies for national defense, not just from a competitive angle, but it's going to be fueling our next warfare generation. And if we even talk about the future of physical robots, these are the technologies that have to be always on and always ready. So I think this is making two bets. It's pushing back on the G7 a bit, saying, you came after our tech companies, we're going to make this a little bit harder for you. But it's also saying, you know what, we're going to take a long-term view here, and we want to make sure that we stay ahead. And we're going to start using this in our industrial military complex as well. And I think you're going to see it really emerge in a very, very fast pace. But that's back to your space example. We're going to use it in space as well.
This all highlights sort of a greater paradox, right? Which is Trump placed David Sachs as the AI and crypto czar. He is no longer in that position. It was a 1-year term, so that term wrapped up, I guess maybe April of this year. Anyone who listened to the All In podcast knew that the Sachs's key point on those two technologies was going to be crypto needs regulations and AI needs no regulations, because crypto's been out there for a little while and actually it's being impeded by the lack of regulation because the industry doesn't have rules of the road. Whereas in AI, it's so new that if we sort of regulate too quickly, it could be all speculative in terms of what we decide that we're going to do. However, we have seen AI's capabilities advance so quickly that it does feel that the public is sort of demanding it. And I think this really started with the first dust up between the Pentagon and Anthropic, where everyone started to realize, engaging these frontier models with the government could mean two things that maybe people aren't that comfortable with. One, mass surveillance, and two, autonomous weapons that kill. And I think those made everyone perk up and realize, we may need to think about this a little bit differently. And so now it does look like, David Sachs was able to hold off regulation for the entirety of the year that he was in the czar position. But now it looks like some level of regulation is about to come down the pipe. Do you think that 1 year reprieve from regulation was sufficient, and now we have enough clarity about the pros and the cons of this technology that it's time to start writing some rules around it?
I think we need more time. I mean, if you look at the cycle, even though it's going really fast, we let the internet really go, right? And only now we're starting to see more and more kind of governance of that after 35 years. So I think we may be moving a little bit too quickly to hyper regulate. But I do think at a minimum, we're going to find those areas that we're going to need to start the dialogue. Like you said, military purposes, maybe civil protections, maybe even this discussion of, how do you create a living wage for dislocated workers in this space? So I think having those policy discussions, which are really driven by the political agenda, could be a good place to start. But I think to go into kind of hardcore regulatory enforcement, I think we're probably years to come away from that. And I think we need to let this thing go. I would say the one area we're probably going to need to work on are things like in healthcare. We need to have kind of responsible use framework. So maybe this is a chance for the industries to step up and take lead and offer some of that guidance before we get regulated. I look at it as a positive for industry leaders to step up and really, use responsible AI as a way to advance technology and innovation.
I would say my one concern around the industry's ability to do that is I just see so few people because of the rate of change and the rate of advancement who actually understand it, right? You know what I mean? People are still largely utilizing it as a chatbot and do not understand that this thing has been architected with harnesses that can, wrap it with loops and have it manage, a fleet of agents, and this thing can just sort of run on its own at this point, right? And it's intelligent enough to observe itself or to have checkers, and it's just it has become very complicated and very deep and very esoteric very, very quickly.
Yes.
I'm a technologist. That's what's saving me in terms of my ability to keep up with it. Right. But the average person cannot be expected to keep up with this technology. And so many of our leaders of industry, they're not average people. I don't mean to say that, but they're not technologists. Most of them are not technologists, right? And they don't actually understand how this thing works and where it is right now. So I think we have to try to figure out how do we make sure that the leaders of industry are kept up to speed on this, because this is the one technology that has come along in any of our lifetimes where it's critical that you understand how this thing works.
And maybe, Marcus, we should put a plea out to everybody listening to who's on a board in a leadership role, because the boards are instrumental in hearing it out. And I would encourage them to invite us to go and talk to their boards. Next week, I'm actually speaking to one of the boards on this topic, and I think we need to do it every quarter, not every year. So maybe there's a call to action here.
I 100% agree with that. There's not a board that I'm on, whether it's for some institution where I'm just privileged to sit on that board, or a portfolio company that I have where AI doesn't need to be an important part of the conversation. So I totally agree with that. All right, final story, so I can let you get on to your next thing. Thanks so much for stepping in to co-host. Midjourney, which was known as just kind of the first image generating LLM, right? Or maybe not the first. Stable Diffusion and Midjourney were probably out of the gates right around the same time. But this was an open source project. Really rough user interface, but it generated really cool images before Sora, before Nano Banana, or any of that kind of stuff. And Midjourney is now going from generating cat images to full body ultrasound scans. Yes. So now Midjourney is getting into healthcare, says their CEO, David Hulse, who showed off the company's first hardware product and plans to build out a San Francisco spa. What do you think about this?
I love it. Healthcare is a third of our GDP. AI is the other third. They get 2/3. It's a great one. And my wife is, does some development with Midjourney. I've watched her do these things. They've been better and better. But imagine if Midjourney can give you an image of yourself or your child in preterm, and all the way project how we're going to look all the way through old age. What an amazing thing! So maybe we should stop putting ourselves on unicorns and really let Midjourney become the healthcare asset that it could be. So
I think it's fantastic, and it's just one of the things I love about this AI world is you can't count any of these companies out, and things can move and evolve, and take on different opportunities all the time. So it's just such a hyper dynamic space. And the idea that Midjourney is entering healthcare, I think is super cool, but also expands my thinking around what any of these AI companies could potentially do coming into healthcare, right? So far we're thinking a lot about the open evidences and the A-bridges, et cetera. But I think it's time to start thinking about maybe some of these more fun AI companies potentially coming into our space.
And what I love about it too is ultrasound is a very affordable technology. It's available to the masses. It's available internationally. It's relatively low risk. So I think it speaks to so many dimensions of healthcare.
Amazing. Ash, this was so much fun. I hope you had fun.
Oh, always a great time, Marcus. And what a great organization of topics. Thank you for inviting me, and always love being with you. Thank you so much.
All right. Well, I'll see you in person before we do the next episode. But don't be shocked when another email comes in your inbox asking if you'll guest host again. This was awesome, man.
We'll be ready. Thank you for all your kind words and your enthusiasm.